So, after a year of mixed signals and a whole lot of global uncertainty, there's really only one question on every investor's mind. Is China's powerhouse economy actually back on track? Well, the first big batch of data for 2026 is in, and let me tell you, the picture it paints is probably not what you were expecting. Because, look, to really do better business with China, you have to know what's going on. That's what we're all about here, saving you time and money with expert insights on trade and investment. So, welcome to Trade with China. The big story for the start of 2026 is one of, well, unexpected strength. Seriously, the data we're about to look at paints this picture of a really robust start to the year, and it's beating a lot of forecasts and setting a pretty positive tone. Let's break down the three big numbers. First up, let's talk about industrial production. It surged by 6.3% compared to the same time last year. Now, the key detail here isn't just the number, it's the acceleration. This growth is actually picking up speed from the end of last year, and that is a powerful signal of momentum. All right, next up, fixed asset investment. Now, it grew by 1.8%. That might not sound like a huge number, but believe me, it's a crucial turnaround. This has flipped from being in the negative back in 2025 to positive growth. That signals a real potential revival in confidence. And to round out our big three, retail sales are up 2.8%. What does this tell us? It tells us the Chinese consumer is opening their wallet again, and they're doing it faster than they were just a month before. It's a steady, solid recovery right where it counts, on the street. Okay, so industrial output is looking strong. The natural next question is, what's actually driving it? And this is where the story gets really, really interesting. It's not just about making more stuff. It's about a fundamental shift in what is being made. And this really tells the whole story right here. While the overall industry grew at a respectable 6.3%, high-tech manufacturing just took off. It skyrocketed, jumping 13.1%. Think about that. That's more than double the pace of the wider industry. We're watching an economic transformation happen in real time. So where exactly is this high-tech boom coming from? Just look at these numbers. We're seeing absolutely explosive growth in things like 3D printing, smart vehicle equipment, and lithium-ion batteries. For anyone investing, this is basically a map pointing to exactly where that new industrial momentum is concentrated. Okay, let's pivot now to investment, because this is where the story really splits into two very different realities. It's almost a tale of two economies, a major boom in one area happening right next to a pretty stubborn slump in another. First, let's talk about the boom. Infrastructure investment soared by an incredible 11.4%. This is classic government-led spending in action, pouring massive amounts of capital into big projects and giving a powerful jolt to the entire economy. But here's the other side of that coin. At the very same time, the all-important property sector is still struggling. Development investment is down a sharp 11.1%. And this stark contrast, that's the central challenge for China's economy right now. And listen, this is probably the most crucial takeaway for anyone watching this market. If you just take that troubled real estate sector out of the equation for a second, the underlying investment picture looks much, much healthier. It's growing at a solid 5.2%. This shows that the rest of the economy really does have a strong foundation for growth. All right, so what about the average person on the street? The consumer is a huge piece of this puzzle. After a period of being pretty cautious, spending is definitely rebounding, but it's the type of spending that really reveals the trend. And you can see it perfectly right here. I mean, sure, sales of physical goods are up, but just look how much stronger the growth is in services. Service retail is leading the pack, growing at 5.6%. It's a crystal clear sign that people are just eager to get out, to eat, to travel, and to experience things again. And a huge catalyst for this was the extended Spring Festival holiday. I mean, the numbers were just staggering. We're talking nearly 600 million domestic trips taken, with spending topping 800 billion yuan. That holiday basically unlocked this huge wave of pent-up demand for tourism and leisure. Now here's how the factory floor connects back to the storefront. We're seeing producer prices. That's what factories charge for their goods. They're starting to stabilize. The year-on-year decline has slowed way down to just negative 0.9%. So why does this matter? Well, it means healthier profit margins for companies, and that can fuel future hiring and investment. It's all connected. Of course, none of this activity, not in the factories, not in the shopping malls, can happen without energy. So let's take a quick look at how the country is powering this whole economic rebound. The data really shows a pretty stable and growing energy sector. You see, crude oil production has bounced back, natural gas is growing steadily, and maybe most importantly, electricity generation has accelerated. It's up 4.1%, and that directly reflects all the increased activity we're seeing in factories and in people's homes. Okay, so we've looked at industry, we've looked at investment, and we've talked about consumers. Let's put it all together now. What does all this data actually mean for you as a business or an investor looking at the China market? Let's boil this down to the key takeaways. So here's the bottom line. You've got to follow the new growth. In manufacturing, it is all about high tech and automation. When it comes to investment, infrastructure is absolutely booming, but real estate remains a significant risk. You have to be cautious there. And for consumption, the big story is the powerful demand for services. These are the core trends that are really shaping the opportunities in China right now. So China's economy has clearly found a new gear to kick off the year. But the big question remains, right? Are these new engines, this high-tech manufacturing and consumer services boom, are they powerful enough to navigate the very real global challenges that are still out there? We're here to bring you the practical knowledge you need to navigate business, investment, culture, and all the economic trends when it comes to trading with China. And honestly, your comments really encourage us. So please press like and subscribe now for more actionable insights and win-win solutions so you don't miss any opportunity to understand and make money in trades with China.